Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 16, 2022. Hope you're all doing well. In today's segment, we'll take a look at the market and also let's take a look at top technology stocks to buy as the market is pulling back pretty well. So with that, let's jump in. In today's segment, we'll talk about one of my favorite stock research platform called StockRover. StockRover is very good for especially for buy and hold investors. Has very good research content. I highly recommend StockRover for all buy and hold investors who love to do fundamental analysis. So with that, let's jump in here. Look, from a market perspective, market went higher yesterday after the Feds announced they're going to do a 75 basis point rate hike, and they will do the rate hike as much as required to tame the inflation. That's why market went higher. Look, Dow Jones Industrial Average up 1% or up 300 points here. S&P 500 up around 54 points, and Nasdaq also up nicely 2.50%. And if you see what went higher yesterday, look, we got most active stocks here. Look, technology is nicely high here. We got AMD, Apple, Amazon all going nicely and high. We got NVIDIA, again semiconductor play, went higher, and we got here a few more things like Tesla. Look, Tesla went higher nicely, and Intel also went higher. So it gives you a very good idea what's trending higher. Then you could click on percentage gainers. You will get a nice idea who is gaining from a percentage perspective. Look, we got Boeing on the top. Boeing went higher nicely. Beaten down stock, we got Netflix going higher, and so on and so forth. Even Etsy, which has been down for a long time, look, Etsy rolled higher. And we got here cruise liners like we talked about earlier. Norwegian Cruise Line went higher, and also we got some other cruise liners like Carnival also went higher. And then you could look at percentage losers. It will give you an idea what went lower yesterday. Look, we got a few names, especially energy names as you see here. Valeros, Schlumberger, all down big time. They've been going high off late. Money is coming out of these energy and some of the defensive sector into high-risk technology names here. Look, we got Marathon, Baker Hughes, again energy play here. Money is coming out. It's a typical sector rotation. When folks think high-risk stock can go higher, they will sell conservative plays and put money into high-risk play. And also, as you see here, we got sectors here. From a sector perspective, this platform StockRover gives you a nice idea what sectors are doing well and where are they in 52-week range here. Look, we got here energy sector right here. Energy sector has been doing very well in a 52-week range here. They're almost at the top here. Whereas other sectors like technology, look, it's completely beaten down. It gives a good idea what sectors are doing great, what sectors are doing not so great. I love to invest in sectors which are beaten down, like technology here. Look, technology is completely beaten down. And you could also invest in sectors like healthcare, which is very conservative type play here. You could invest there also. That's also beaten down big time. And you could look at other sectors like basic materials, also beaten down as you can see here. This gives me a very good idea. But if you want to look at different time frames, I love to look at 5-day. I could just click on 5-day on top here. It tells you 5-day what's going on here. Look, in a 5-day time frame here, stocks like Royal Caribbean and Carnival, Norwegian all lost money. So you get a good idea what's going on in the little bit longer time frame. Look, we got 5-year sector performance also. You could click on 10-day, 1 month, 1 year. Sometimes I love to look at 5-year. That gives me a good idea. As I click on 5-year, it tells you 5-year how is the performance going on here. Dow Jones in 5 years. Look, we got nice 43% increase here, and 70% in S&P 500. Good increase here. Nasdaq rolled higher, 88%. And you look at your favorite stocks here and see how they are doing in a longer time frame. Looks like we still have 5-day here. Yeah, we got 5-year right here. Look, we got 5-year return in all these major sectors here. All right, now I would also quickly look at one more detail here. We can look at the stock market and see how the market is doing. So from a market perspective, it gives a good idea. If I look at Dow Jones Industrial Average yesterday, I could click on right here, DJIA. It tells me how did the market do yesterday. Look, StockRover is loading a small chart here for Dow Jones Industrial Average. Look around as we squint through here, as it's loading here, around 2 p.m. is when Fed came up with their rate hike, and market liked it. Market rallied higher, but around the close, that enthusiasm came down here. Market came down. So in the futures market, it's down big time. So as you can see here, really folks are taking this opportunity to sell some of the names. That's why in the futures market it's coming down. So like this, you could look at other indices here. You could look at Nasdaq and see how they're doing yesterday, and look Nasdaq also as it's coming up here. Nasdaq also followed similar pattern. It came lower toward the end, but after the rate hike, Nasdaq also went higher. All right, so now what we'll do is we'll look at the top technology stocks. I love this platform so much. It gives you a lot of flexibilities. And now I got few filters here, and we could look at some of the screeners here. Look, I got a set of screeners I normally look at. As you can see here, I got a lot of screeners that I typically look at to see how the stocks are doing. In today's segment, I will go into a sector screener here. I got sector technology, and let's look at this here. So look, I got here my filter setup here. I could quickly show my filter, so we could look at the filters. Look, from a filter perspective, right now I got price more than $1, average volume in 3 months more than 200,000 shares traded, and sector is technology. So you could add other criteria also. I typically like to start with a little bit broader basket and then narrow it down. So this filter looks okay for me. So let's start with this filter. Some of you, you might want to change the price here. Let's do one thing. Let's change a price more than $5. So we don't want unstable stocks. Let's go with that. And now it will narrow down further, and it will be less number of stocks. Look, we got 415 stocks with this criteria. Let's save this. And what I could do now, I could go into let's say save. I could go into run in table. So as I do that, it will bring up a nice table and show the stocks. Look, we got nice table here with this platform here, StockRover. You could basically say what type of view you want to see. I created few views here. I got a report view where I want to look at some of these attributes that I normally look at. So that's my favorite view. I just created this view. So it's very easy to create the view. You can say what columns to add to your view. For example, in this report view, I got all these columns here, and if I click on add column, I could add more columns here. Right now I think I reached my limit. It lets you add up to 35 columns here. Right now I added all the 35 columns, but you could create one more view and basically track the columns that you want to see. Look, right now we got all the big stocks here. We got Apple, Microsoft, and so on and so forth. And I could increase the the width of these columns easily by just pulling it up. And look, we got great stocks here. All technology stocks. It's sorted the top 250 stocks. And if you love these stocks here, you could just download. You could go here, download these stocks to a CSV file or comma separated file. That's a great here. So now we got all these stocks here. You can see their performance, how they did yesterday, and how they did for 5-year, 5-day, 10-day, 1 month, 3 month, 6 months, all the way to 1 year, and so on and so forth. It gives you a lot of this performance here. You could even get 10-year performance for all these stocks. So now we got our list here. Now next step is to do a little bit research on these names here. For example, you love Apple and you want to see how Apple is doing. So what you could do here is but just by looking at this list here, look, we got Apple right here. Apple has got nice a 5-year sales change. Just by looking at this, top line is growing for Apple. That's a good news here. And then you could look at net margin here. Apple net margin 26%. That's also great. They have some debt, as you can see here, slightly higher debt for Apple, but Apple is a good stock. I'm not too much concerned, even though their debt is high, but they're doing great. And it tells you other information like how much institutions are owning, what the float available, and we got short ratio, which is very low, as you can see here, and price to sales ratio or valuation pretty low here. So that's one of the reasons I love it. It's a nice looking information here, and you could customize, you can drag and drop, and so on and so forth. And what I love more is I could click on Apple here, and I want to do little more research besides what's shown here. So the moment you click on Apple here, and you could bring up, I have one more window here where I could look at a little more details. Look, it provides an inside view here. You could look at the inside of Apple. I love to see how the stock is doing. Look, I got here a 5-year chart. I could go to 1-year chart and see how this Apple stock is doing in 1 year. Look, on a 1-year perspective, we got nice looking chart here. It has done 2.01% as technology is not doing great, but it also tells in a 52-week range where they are. Gives you a very good idea, and then you could look at great industry leading scores here. We got fair value. Fair value for Apple is 144 right now, as you can see here. Apple is below its fair value. Current price is 135. That tells you Apple is undervalued right now. Good time to buy some Apple here. It also compares the Apple and looks at the score here. Valuation is very low. The high score tells it's a low valuation at this time. It's a good from a valuation perspective. It's great from a growth perspective. And it's great from a quality perspective. Quality means things like gross margin, net margin. Sentiment is a little bit sour for this company right now. Folks are really wondering. And from a Piotrowski F-score perspective, it tells you how is the book. It tells you books are great and they're really doing nicely from a trajectory perspective. And the latest one is right here. This is the latest quarter, trailing 12 months. Looks like they're doing very well. From a Piotrowski F-score perspective, books are doing great and very consistent and nice financial books. And the Altman Z score is about financial strength here. Company has got great financial strength. Look, trailing 12 months, it's great. And also look, 1 year ago, 2 years ago, all doing great here. In a very quick snapshot, it gives a good idea. StockRover even goes further. It tells you how is it compared to the industry. Look, there is a nice industry benchmark here. I love to look at this industry benchmark and understand where the stock is at. Look, from a sentiment perspective, this company has got a little bit lower sentiment compared to S&P 500. But when it comes to the return, look at 1 year, 3-year, 5-year return here. This company handily beat S&P 500 in all these returns here. S&P 500 in 1 year did negative 9%, whereas Apple did positive 5.1%. It gives you an idea how is the stock doing. It gives you tons of research, as you can see here. You can look at the growth, you can look at profitability, you can look at the competitors. I love to look at this score, especially when I do my fundamental research. And then you could look at analysts and see what analysts are saying about this company. Right now, look, it's got a strong buy rating. I love to look at this research also and see how analysts are doing. What did they think about this company last month, 2 months ago, and right now is it trending higher, trending lower? And also it tells you average median price or average target price, which is much higher than the current price. That's one of the reasons I love it. And I could also look at looks like things like stock rating. Look, right now stock rating for Apple is 69, which is very healthy. I like it. And as you look through here, you could get more information. You could click on efficiency, and you could look at the efficiency and look at the profit margin. How is the margin doing? Look from a margin perspective, it slightly went higher between 2020 and 2021. Net margin also went higher. That's great. Then you could look at financial strength and see how they're doing from a debt to equity perspective. Look, from they're increasing the debt. They're getting the debt for a very cheap price here. But look, it's now it's slightly tapering down, as we see here. Or they're stabilizing. They might come down. And interest coverage ratio is pretty okay here, not too bad. So it gives a good idea. If you're a dividend investor, you could click on dividends and you could get dividend information for Apple. Look, they're also doing nice dividend per share. It's increasing. If you are a dividend investor, it's a great stock to buy here. All right, so with that, let's go back here to our scanner here. Then we got a few more companies, as you can see here, all great technology companies. And I love to see the sales, the top line growth here. We got average 5-year top line growth, 1 year, and quarter over quarter. Look, all these companies have done great here. And few companies, as an example, we got ASML here. ASML has got negative quarter over quarter. That tells you in the recent quarter, there is the sales came down slightly. And if you want to look at such companies, you could just click on ASML here, just like we did here, and you could get a quick snapshot here, and then you could just go here and look at the insight and see what's going on with the ASML here. Look, ASML, don't need to worry, strong buy. You could also look at the summary here for ASML. And look, right now from a summary perspective, this company has doing very good here, and they got nice score here. Value score is 72. That tells you valuation is low. High growth company, high quality, great from a quality perspective and margin perspective. Books are great. Look, Pietroski F score is very high. It gives a good idea. Then you could also look at quick stock ratings here, and it tells you the rating. How is the rating? Look, rating right now is low here, 27, because it's the sales growth came down. That's why rating came down here. But overall, I would be a buyer of stocks like ASML at these beaten down levels. And we could go down the list here. It's sorted by market cap here. Some of you love to buy stocks with low market cap, me included. I would also scan down through this list here, look at a little bit lower market cap companies, and you could even sort this. For example, you want to see market cap which is a little bit lower, you could just click here. It's just like a Excel spreadsheet. I could just click here and I could just put a filter here. For example, we want to see market cap from $1 billion to $10 billion. So we can say 1 billion is 1,000 here, and we'll say 100 billion. There you go. Now it will even filter it down just with this criteria here. So that way you don't look at bigger cap names like Apple and Microsoft. Look at some smaller cap names. Look, now we filter down effectively with a little more mid cap type names here. Look, we got ServiceNow, Applied Material, and so on and so forth here. And we have one of my favorite Indian stock here, Infosys. You could look at these names here. Look, I love names like Lam Research, which is one of my favorite stock here. You could click on Lam, and then you could do a little more research by going into the insight and see what's going on with the Lam Research. Look, Lam Research company is doing great. Stock is down, as you can see here. In a 1 year time frame, stock is a little bit down, as you see here. But as you look at 5 year here, 5-year stock has done good here. Look, nice long-term performer. And if you look through here from a rating perspective, nice valuation is low here. That's why it's a high score. Growth is great. Quality is great. The tells you gross margin is great. Sentiment for semiconductor stocks like Lam Research is low right now. It's a good time to buy. The books are good. That's why Pietroski F score is great. Altman Z score is also good. Then you could look at some of the industry benchmark here. Stock has got low sentiment. Return perspective, a little bit low return as of now here. But look, compared to S&P 500, Lam Research has got a little bit lower return. It's a high beta or high volatility stock here. But look, longer term, this stock has trounced S&P 500 nicely, has done great. So that's why stock like Lam Research here, I would be a buyer at these levels and go from there. You could also look at the stock rating here. From a stock rating perspective, you could just go to the top here. Look, it's got a nice and high stock rating, overall 68 rating. Then you could see the details of the rating as you go down in this chart here. So that's why I like to use StockRover and get a good idea on the financials. Then you got a few more as you scan through here. I love Palo Alto Network. This company has been doing great when it comes to cyber security. You could click on Palo Alto Network here, and you could do same thing. You can go here, go to the insight and see what's going on. Look, Palo Alto Network last 5 years did great. Look at that performance. Nice performance in last 5 years. And as you scan through here, this company's got a valuation score of 62, which is pretty good here. And then you could look at other details about how it's doing against the industry. Look, a long-term Palo Alto Network has done great. Even 1 year, 3 year, 5 year, it kind of trounced the S&P 500 nicely, had done great return. And you could also look at the profitability, growth, earnings per share. This company has done great. You could buy companies like Palo Alto Network. It will continue to do very well. It also tells you some of the industry peers, even though it calls competitors. It's not really competitors, as you can see here in this list. Only real competition for Palo Alto Network could be Fortinet here, which is a security company. Otherwise, generally these are the stock companies in the same industry or sector. All right, so you could go down further here. We got a few more. I love stocks like Synopsys here. It's a great company. You could buy this beaten down name here. And then we got stocks like Marvell, which is also good. I love Marvell. Look at Marvell here. Nice top line growth here. We got sales for Marvell for 1 year, 5 year, doing great here. It's a good company. Stock is beaten down. You could buy stocks like Marvell at these levels here. I also love Cadence Design. Again, a great stock here. You could just click on Cadence and it will bring up same insight here. You could look at insight. Look, Cadence last 5 years have done great. Look at that performance here. You could buy stocks like Cadence here, which is slightly beaten down here. Look at the overall Piotrowski F score, Altman Z score, doing great. You could buy stocks like Cadence Design and even Synopsys and hold on to them. All right, so you could look at a few more here. We got a few more. We got Autodesk, which is a great one, beaten down completely. You could buy some Autodesk. Look at Square. Square is down big time. You could buy this great company under Jack Dorsey. This company will also do very well. With Bitcoin falling down, Square also came down big time here. And one of my absolute favorite is Arista Network. Jayshree Ullal is the CEO here. Look, as you look through here, they got nice top line growth here. Look, Arista Network, nice top line growth. Look at 5 year and quarter over quarter, they've done great. And you could look at this company in a little more detail by clicking on Insight here. Look, Arista Network, look at that performance in 5 years. That's it, done great in 5 years here. Off late, it coming down slightly with all the rotation game. You could also click on 1 year. In 1 year, you can see here, your stock is trading sideways. It's a good name here. That's why I like to pick up stocks like Arista Network in this market sell-off and hold on to it. Look, from a growth score perspective, great growth score. Quality and the margins are great. Piotrowski F score 6 is above average, which is good. Altman Z score 11.2 is also good here. Overall, a good company. I would be buying stocks like Arista Network in this market here. And as you scan through here, we got a few more. We got Datadog. Look, Datadog came down big time here. This stock is also great one to buy at these levels here. Historically, this has done very well and a very good big data company. And we got a few more for solar stock here, Enphase Energy. It's a great one. You could buy Enphase, and as you click through Enphase, you could do a little more research here and go into insight. It tells you how is Enphase doing. Look, Enphase in last 5 years stock has done great. Last 1 year stock is slightly down, as you can see here, and it's in the middle of the range in 52-week range here. So you could buy this great company here. Look, it's done pretty good, above average Piotrowski F score and great Altman Z score. Look, growth is great and quality and margins are good for this company. I'd be looking at buying stocks like Enphase Energy and also Solar Edge and take advantage of beaten down market and buy some solar names here. And the list goes on here. I love stocks like Trade Desk also here, completely beaten down. For stocks like Trade Desk here, you got to be buying in small quantities because it's a high multiple stock. Even up here, the price to sales ratio is slightly high for this. Look, it's 17.6. That's why you got to be a little bit careful with stocks like Enphase Energy. Buy slowly. And even Trade Desk, look, it's even higher, 18.5 price to sales ratio. Whenever you see higher price to sales ratio, buy very slowly, buy in small quantities. They will bounce back hard, but there will be some more pain as you go forward. And we got a few more, like I love UAMC here, semiconductor play. Stock is beaten down. You could buy this company also. And we got a few more, as you see here. That's one of the reasons I love this platform here, StockRover. You could do very good research and look at what's going on here. And if you love to look more, you could even click on StockRover ratings and scores. If you look at scores here, it gives you a nice view of all the StockRover scores. We could just click on this here. It brings up the scores. If you don't have too much time to do the research, you could click on StockRover scores. It tells you, hey, what's the stock and how is the score from an industry perspective for this company's ServiceNow, and it tells you how is it doing from a valuation perspective, growth perspective, how is their score and what the overall score. I love to see this view here. It will give a very good idea. You could also click on StockRover ratings. They got their own ratings here. You could click on StockRover rating. They got their proprietary rating. They will rate all these companies in a and give you a bird's eye view. By looking at this, you get the overall rating of the company, and you could look at the growth rating, valuation rating, efficiency, basically margins, financial strength. It gives you a very good idea, and you could, in a bird's eye view, you could see what companies you can buy here. Look, just by looking at this, you could say, you know what, I like to buy companies like ServiceNow, which is beaten down big time here. Still nice overall rating against the peers, and growth rate is great. You could also look at a company like Fiserv here. You could just take a look here. It's also doing great. And you could look at such companies here. And look, you got one more here, Synopsys, one of my favorite stock. This view is so valuable. By looking at this view, you can make a decision fairly quickly because all this research is synthesized into a nice score format here. You could look at this and buy great companies and go from there. At the same time, stocks like Team, you got to be a little bit careful with the Team here, mainly because look, valuation score is low. That tells you high valuation. And look, from a financial perspective here, Team, it's got a low financial score here, just 35, mainly because they got a lot of debt on their balance sheet. That's one of the reasons I love to look at this view. All the research is compiled into a nice format. I think StockRover team has done a great job putting this StockRover ratings. It gives you a very good bird's eye view about the company without doing too much research, because research is already done for you by StockRover. So with that, let's conclude here. Thank you very much. Happy investing and trading. Have a nice day.